Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, after much determination on the upside challenges, the Australian dollar bears have come back in bigger numbers and the market has rejected the region of 66.45 and now looks towards 65.75. A break beneath there would give further scope to my objective, which holds at 65.30, and reassess from there, as we could be looking back towards the 11-year lows of 64.20.65. Any advancement, I still feel that 66.45 will contain any bullish occurrence in terms of a rally unlikely to withhold, as we've seen over the last 4 trading days. The euro, well, to much surprise, has extended its move as the US dollar, which measures the greenback strength against a basket of 6 major currencies, has posted a fresh low of around 97.51. This, on the flip side, has seen the euro rally to a fresh 6-month high of 112.48. It is assessed that the market will be a little bit nervous into tonight, as I feel with the non-farm payrolls numbers could actually trigger a slight rebound in the US dollar if the numbers are greater than what they're forecasting at the moment of around 175,000 jobs, with the previous number of being 225,000. But if the number is weaker than 175, then the dollar could actually slip a bit further. So do be on your guard in terms of where the euro may be heading. At the moment, I feel that 112.40.85 is a cap and serves as a supply zone, and looking for a move back to 111.65 now beneath there would give us a further view back towards a trigger level of 110.90 and reassess. As you can see with dollar yen, the market crushed the level of 106.80 and now looks further to the downside of 105.60.80. A break beneath there would give further scope to the downside and bring in a possible target of 104.45 to 55. At the moment though, the market is not backing off and the trend is very strong, so do keep an eye on 105.60, as if we break there, as I say, 104.45 will be the next target, with a resistance seen around 106.55 to 107.15. The British pound has found further legs since the inverted hammer, and the market is now looking towards a resistance of 129.70.90. I do ascertain that the market will fail towards here, and do be on your guard if you're looking for a possible reversal, because I believe the market will eventually see a cut from the Bank of England and then therefore could see a potential downturn back towards the lower side of the range around 128.45, maybe to 127.25.65. So I still feel that, as you can see from the rejection, close to that 127.70.90 should still serve as a near-term cap. Dollar CAD, well, the market has just not been able to break above that level and sustain of 134, and therefore from the recent failed upside test, I do anticipate that the market will look back towards the downside, but we still need to see the break of 133.75 to trigger the move down to 132.75. But as you can see, the bears are still quite happily containing any advancement, with the resistance seen at 134.40. The gold outlook, well, by surprise, is the fact is that we've got another $40 rally overnight and now looks towards the resistance seen at 1,688 to 98. Do be on your guard, because the swings have been very, very strong, because we started off with a move to $87 fall to a $65 rally and now to a $40 rally. They're getting very, very big, and if you're trading from the side of being long or even short, is the fact is that the risk scenario is still very, very high, and therefore we could still see pullbacks to at least towards the region which is around either $60 or lower to around 48.52. But that being said, if we break above 88.98, then that would break us into the 1,700 region and look towards the targets of around 1,720 to 1,780.90 as the uncertainty to the coronavirus continued on. The Oil outlook, since the Marubozu candle, the market is struggling to rebound and at the present is looking towards the support at $44.80. Now, as long as we hold above there, I'm quite happy to say that this candle, which is a Marubozu, should remain as a signal to support a further rally to the upside. But due to the uncertainty of the fact of the coronavirus, demand has still been somewhat short in terms of seeing a further rally. But I would be completely out of this market if we break 44.80, because I feel that we could risk back to the recent lows of somewhere $42 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to this day and to the weekend.